Based on the historical data and forecast, Bitcoin exhibits a volatile trend with periods of oversold and overbought conditions. The RSI consistently dips below 30, indicating oversold territory, while occasionally touching 50, suggesting a potential shift in momentum. The Bollinger Bands show that the price has recently moved outside the upper band, indicating an overbought condition. Given the recent upward trend and forecast prices consistently above 89,000, I propose a strategy focusing on capitalizing on pullbacks to the support level and utilizing the RSI and Bollinger Bands for precise entry and exit points. We will initiate a long position when the RSI reaches an oversold level of 20, around $86,300, placing a stop-loss order at $85,000 to mitigate potential losses. The initial target price will be set at $90,000, aiming for a quick profit from the anticipated upward movement. To further refine the strategy, we'll incorporate the Bollinger Bands. If the price retraces to the middle band, around $89,000, after reaching the initial target, we will consider adding to the position. The stop-loss will be adjusted to the bottom of the Bollinger Bands, around $85,000, and the target price will be raised to $93,000, reflecting the continued bullish outlook. This dynamic approach allows us to adapt to market fluctuations while maximizing potential returns. The final target price will be $95,000. This combined strategy leverages both RSI and Bollinger Bands to identify optimal entry and exit points, ensuring a balanced risk-reward profile. Based on the historical data and forecast, Ethereum shows a generally upward trend, despite some volatility. The RSI consistently dips below 30, indicating oversold conditions for a significant portion of the period. The Bollinger Bands also suggest periods of price contraction followed by expansion, indicating potential for price swings. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands to capitalize on these trends. We will implement a long position strategy when the RSI falls below 20 and the price touches the lower band of the Bollinger Bands. Specifically, on December 10, 2025 Wednesday, the RSI is 43.9, and the forecast price is $3,080. The lower Bollinger Band is $2,610. We should enter a long position at $2,610 with a stop-loss order at $2,580, just below the lower band. The initial target price will be $3,080, aligning with the forecast. If the price reaches $3,080, we can move the stop-loss to break-even, $2,610, to secure profits and allow for further upside potential. This strategy aims to leverage the oversold conditions and Bollinger Bands expansion for a high-return investment. Based on the historical data and forecast, XRP shows a slight upward trend. The RSI consistently fluctuates between 33.4 and 49.4, indicating periods of oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Given the current RSI of 49.4, which is approaching the overbought level of 80, and the forecast price hovering around $2.12, a strategic approach is to initiate a short position with an entry price of $2.12. A stop-loss should be placed slightly above the upper Bollinger Band at $2.34 to protect against unexpected upward movements. The initial target price is set at the support level of $2.03, aiming for a conservative profit. To refine the strategy, we'll incorporate a dynamic adjustment based on RSI and Bollinger Bands. If the price touches the $2.34 stop-loss, the position is closed. If the price reaches the target price of $2.03, the position is closed. However, if the RSI falls below 20 during this trade, indicating an oversold condition, we will move the stop-loss to the center of the Bollinger Bands at $2.15. This adjusts the strategy to capture potential rebounds from the oversold level, while still protecting against significant downside risk. This combined strategy aims to maximize returns while mitigating potential losses in the volatile XRP market. Based on the historical data and forecast, BNB shows a mixed trend with periods of consolidation and upward momentum. The RSI consistently remains below the 30 level, indicating an oversold condition. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Combining these indicators, I propose a long position strategy with an entry price of $870 plus $0. A stop loss should be placed just below the lower Bollinger Band at $815 plus $0 to limit potential losses if the price continues to decline. The initial target price is set at the center of the Bollinger Bands, $883 plus $0, reflecting a potential rebound towards the mean. To refine the strategy, I'll incorporate a second target price based on the resistance level. If the price reaches $883 plus $0, consider moving the stop loss to break even. If the price continues to move upwards, a second target price of $892 plus $0 can be set, aligning with the recent resistance level. This layered approach allows for capturing potential profits while managing risk effectively. The overall portfolio will favor this long position, allocating 60% of capital, with 30% held in reserve and 10% allocated to a hedging strategy to mitigate downside risk. Based on the historical data and forecast, Solana exhibits a generally upward trend, although with considerable volatility. The RSI consistently remains below 50, frequently dipping into oversold territory below 30, indicating a potential for a rebound. The Bollinger Bands show that the price is currently near the lower band, suggesting a possible upward movement as the price approaches the center band. Considering these factors, I recommend a long position with an entry price of $135. Place a stop-loss order at $126, coinciding with the established support level, to mitigate potential losses. Set a target price of $144, aligning with the recent high and providing a reasonable profit margin. To refine this strategy, I will incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the RSI rises above 60, indicating overbought conditions, consider taking profits or tightening stop-loss orders. Conversely, if the price breaks below the lower Bollinger Band and the RSI falls below 20, consider reducing position size or re-evaluating the trade. The forecast data suggests a stable price in the short term, supporting the initial long position. The portfolio will prioritize the long position, with adjustments based on the RSI and Bollinger Bands to maximize returns while managing risk. Based on the historical data and forecast, TRON demonstrates a slight upward trend, although it has been oscillating within a defined range between the support price of $0.274 and the resistance price of $0.292. The RSI has been consistently below 50, indicating a generally weak or neutral momentum. The forecast prices for the next week are projected to remain relatively stable, hovering around $0.275 to $0.277. Given the current RSI levels, which are in the oversold territory, below 30, I recommend a long position with an entry price of $0.275. To mitigate risk, set a stop-loss order at $0.268, just below the bottom of the Bollinger Bands, which indicates a strong support level. For the target price, I suggest $0.286, aligning with the center of the Bollinger Bands and a potential resistance level. To further refine this strategy, consider the Bollinger Bands. When the price touches the bottom band, it signals a potential buying opportunity. The RSI confirms this, as it's currently in oversold territory. This confluence of indicators strengthens the bullish signal. Therefore, the portfolio will prioritize the RSI strategy with a slight adjustment based on the Bollinger Bands. If the price falls below $0.275, the long position should be reconsidered, and the stop-loss order should be adjusted accordingly. This approach balances the potential for high returns with a prudent risk management framework, suitable for a discerning investor seeking high returns. Based on the historical data and forecast, Dogecoin shows a slight downward trend, although it has been fluctuating within a defined range. The support price is consistently at $0.136, while the resistance is at $0.185. The RSI has been mostly below 50, indicating a weakening momentum, and has recently climbed to 46.0, suggesting a potential rebound. The Bollinger Bands have been contracting, which often precedes a breakout. Considering these factors, I recommend a long position strategy with a focus on capitalizing on potential short-term rebounds while mitigating downside risk. I suggest entering a long position at $0.143, coinciding with the forecast price on December 10, 2025. Place a stop-loss order at $0.136, right at the support level, to limit potential losses. Set a target price at $0.158, aligning with the middle of the Bollinger Bands and a reasonable profit target given the current trend. This strategy combines the RSI signal of potential oversold conditions with the Bollinger Bands indication of a possible breakout. This approach aims to achieve a balance between capturing potential upside and protecting against further downside, given the current market conditions. Based on the historical data and forecast, Cardano shows a clear downtrend from November 20, 2025, to December 3, 2025, with the RSI consistently below 30, indicating an oversold condition. The forecast for the next week suggests a slight recovery, but it remains within a tight range around $0.41. Considering the support price of $0.405 and the resistance of $0.501, a conservative strategy focusing on short-term gains is recommended. I suggest a long position when the RSI crosses above 20. The entry price will be $0.409, with a stop-loss set at $0.386, just below the recent low. The initial target price will be $0.451, aligning with the recent high, and a secondary target of $0.501, the resistance level, can be considered for a more ambitious return. To refine the strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading near the lower Bollinger Band, reinforcing the oversold condition. When the price touches the lower band, it suggests a potential bounce. Therefore, I recommend entering a long position at $0.408, with a stop-loss at $0.386, and a target price of $0.451. If the price breaks above the upper Bollinger Band, which is unlikely given the current trend, we would consider taking profits or adjusting the stop-loss. This blended strategy, combining RSI and Bollinger Bands, offers a balanced approach, capitalizing on short-term oversold bounces while mitigating risk with a well-defined stop-loss. Based on the historical data and forecast, Bitcoin Cash shows a clear upward trend. The price has consistently tested the support level of $560 and bounced back, indicating strong buying pressure. The RSI has fluctuated between 44.5 and 61.5, suggesting periods of both oversold and overbought conditions. The Bollinger Bands have also widened recently, confirming increased volatility and potential for further price movement. Given the forecast predicting prices reaching $604, I recommend a long position. We will enter a long position at $521, placing a stop-loss order at $560 to mitigate potential losses. Our target price will be $586, aiming to capitalize on the predicted upward momentum. To refine this strategy, we will incorporate RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, we will consider entering a long position. Conversely, when the price touches the lower Bollinger Band, it also signals a potential buying opportunity. We will combine these signals with the overall upward trend and the forecast data to maximize our chances of success. Therefore, we will enter a long position at $521, set a stop-loss at $560, and target a profit of $586. This approach balances risk and reward, leveraging both technical indicators and fundamental analysis for a high-return investment. Based on the historical data and forecast, Wrapped Beacon ETH shows a volatile trend with periods of consolidation and upward momentum. The RSI indicates that the asset has been mostly in the oversold territory, with recent readings approaching overbought levels. The Bollinger Bands suggest periods of high volatility and potential trend reversals. Considering these factors, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels to maximize returns. The entry price will be $3,190, coinciding with the first forecast price and a potential bounce from a slight dip. The stop-loss will be set at $3,030, just below the established support level, to protect against downside risk. The initial target price will be $3,290, aligning with the forecast price and a reasonable profit target. To refine the strategy, we will incorporate dynamic adjustments based on the RSI and Bollinger Bands. If the RSI reaches 80, indicating overbought conditions, we will consider taking partial profits at $3,290 and tightening the stop loss to $3,230. Conversely, if the price touches the lower Bollinger Band, indicating an oversold condition, we will consider adding to our position. If the price breaks above the resistance level of $3,890, we will set a new target price of $3,450, and if it breaks below the support level of $3,030, we will close the position entirely. This adaptive approach allows us to capitalize on both upward and downward movements while mitigating risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH shows a volatile trend with periods of consolidation and upward momentum. The RSI indicates that the asset has been mostly in the oversold territory, with recent readings approaching overbought levels. The Bollinger Bands suggest periods of high volatility and potential trend reversals. Considering these factors, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels to maximize returns. The entry price will be $3,190, coinciding with the first forecast price and a potential bounce from a slight dip. The stop loss will be set at $3,030, just below the established support level, to protect against downside risk. The initial target price will be $3,290, aligning with the forecast price and a reasonable profit target. To refine the strategy, we will incorporate dynamic adjustments based on the RSI and Bollinger Bands. If the RSI reaches 80, indicating overbought conditions, we will consider taking partial profits at $3,290 and tightening the stop loss to $3,230. Conversely, if the price touches the lower Bollinger Band, indicating an oversold condition, we will consider adding to our position. If the price breaks above the resistance level of $3,890, we will set a new target price of $3,450, and if it breaks below the support level of $3,030, we will close the position entirely. This adaptive approach allows us to capitalize on both upward and downward movements while mitigating risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a clear upward trend. The price has consistently tested the support level of $560 and bounced back, indicating strong buying pressure. The RSI has fluctuated between 44.5 and 61.5, suggesting periods of both oversold and overbought conditions. The Bollinger Bands have also widened recently, confirming increased volatility and potential for further price movement. Given the forecast predicting prices reaching $604, I recommend a long position. We will enter a long position at $521, placing a stop-loss order at $560 to mitigate potential losses. Our target price will be $586, aiming to capitalize on the predicted upward momentum. To refine this strategy, we will incorporate RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, we will consider entering a long position. Conversely, when the price touches the lower Bollinger Band, it also signals a potential buying opportunity. We will combine these signals with the overall upward trend and the forecast data to maximize our chances of success. Therefore, we will enter a long position at $521, set a stop loss at $560, and target a profit of $586. This approach balances risk and reward, leveraging both technical indicators and fundamental analysis for a high-return investment. Based on the historical data and forecast, Virtual's protocol has shown volatility with a clear support level at $0.836 and resistance at $1.15. The RSI has fluctuated between 37.2 and 47.0, indicating periods of oversold and overbought conditions. The Bollinger Bands have widened and narrowed, reflecting the changing volatility. Considering the recent price action, the RSI is approaching the oversold level, and the forecast suggests a slight upward trend. Therefore, I recommend a long position strategy. The entry price should be $0.903, with a stop-loss order set at $0.836, which aligns with the established support level. The initial target price should be $0.984, based on the recent high, and a secondary target price of $1.15, corresponding to the resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it confirms the oversold condition, strengthening the buy signal. If the price breaks above the upper band, it suggests an overbought condition, prompting us to take profit. Considering the forecast, the price is expected to hover around $0.90 to $0.93 initially. I suggest scaling out of the position as the price approaches $0.984 and $1.15 to maximize profits. This combined RSI and Bollinger Band strategy aims to capitalize on short-term price movements while managing risk effectively by utilizing support and resistance levels. Based on the historical data and forecast, Avalanche shows a fluctuating trend with a recent dip and potential for recovery. The RSI consistently hovers below 50, indicating a generally weak momentum. The Bollinger Bands have been widening, suggesting increased volatility. The forecast for the next week predicts a stable price around $13.5 to $13.7, which is near the current support level of $12.7. Considering these factors, I recommend a long position strategy focusing on short-term gains. We will enter a long position at $13.5, placing a stop-loss order at $12.7 to protect against significant downside risk. The target price will be set at $14.8, aiming for a $13 profit per unit. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, we will enter a long position. Conversely, if the price touches the lower band of the Bollinger Bands, it signals a potential bounce. Combining these signals with the forecast price, we will enter a long position at $13.3. The stop loss will remain at $12.7, and the target price will be $14.8. This combined approach leverages both momentum and volatility indicators to maximize potential returns while minimizing risk. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, Bittensor shows a downtrend with a recent bounce. The RSI consistently stays below 50, indicating a generally weak momentum. The forecast for the next week predicts a continued downward trend, with prices ranging from $270 to $262. Considering the support price of $266 and the decreasing Bollinger Bands, I recommend a short position. The entry price should be $270, with a stop-loss set at $275 to limit potential losses if the price unexpectedly reverses. The initial target price is $266, aligning with the established support level. To refine the strategy, I will incorporate the RSI and Bollinger Bands. If the RSI falls below 20, indicating an oversold condition, we can consider covering the short position and potentially initiating a long position. Conversely, if the price touches the bottom of the Bollinger Bands, it suggests a potential bounce. In this case, we can consider covering the short position and waiting for a better opportunity. The final target price is $262, anticipating the downward trend based on the forecast. This portfolio combines a trend-following approach with momentum indicators for enhanced risk management and potential returns. Based on the historical data and forecast, Chainlink exhibits an upward trend, supported by recent price increases and the projected forecast. The RSI consistently fluctuates, indicating periods of both oversold and overbought conditions. The Bollinger Bands show price movements within a defined range, with the recent price approaching the upper band. Considering the RSI nearing the overbought level of 80 and the price testing the upper Bollinger Band, I recommend a cautious strategy. Initiate a long position at $13.1, setting a stop-loss at $12.1, just below the established support level. For the target price, aim for $14.1, aligning with the forecast and upper Bollinger Band. To enhance the strategy, I'll incorporate a dynamic adjustment based on RSI. If the RSI drops below 20, indicating an oversold condition, consider entering a long position at $11.7, with a stop-loss at $11.4 and a target price of $13.5. Conversely, if the RSI exceeds 80, signaling an overbought condition, consider initiating a short position at $16.6, with a stop-loss at $17.2 and a target price of $14. This blended approach, prioritizing the upward trend but incorporating RSI signals, offers a balanced risk-reward profile for potentially high returns. Based on the historical data and forecast, Ethena shows a recent trend of consolidation after a brief upward move. The RSI consistently remains in the oversold territory, below 30, suggesting a potential for a bounce. The Bollinger Bands are narrowing, indicating decreasing volatility and a possible breakout. The support price is consistently at $0.243, while the resistance is at $0.31. Given the current oversold conditions and the forecast predicting prices around $0.25 to $0.26, I recommend a long position with a focus on a short-term rebound. Therefore, I suggest entering a long position at $0.253. The stop loss should be placed just below the support level at $0.23 to protect against a potential further decline. The initial target price should be set at $0.28, aligning with the resistance level. If the price reaches $0.28, consider moving the stop loss to break even to secure the initial investment and potentially trail the price upwards. This strategy combines RSI oversold signals, Bollinger Bands contraction, and support/resistance levels for a calculated risk-reward approach. Based on the historical data and forecast, Curve DAO shows a downtrend with support at $0.387 and resistance at $0.427. The RSI consistently fluctuates below 50, indicating a weakening momentum. The forecast for the next week predicts a continued decline, with prices ranging between $0.381 and $0.395. The Bollinger Bands also suggest a potential downward movement, as the price is nearing the lower band. Therefore, I recommend a short position strategy. Entry price should be $0.395. The stop loss should be set slightly above the resistance level at $0.427 to protect against unexpected price surges. The target price should be $0.381, aligning with the lowest forecast price. This strategy combines technical indicators and price forecasts to capitalize on the anticipated downtrend. The RSI indicates an oversold condition, but the overall trend suggests a continued decline. The portfolio will be 60% short position, 20% RSI strategy, and 20% Bollinger Band strategy to maximize efficiency. Based on the historical data and forecast, basic attention shows an overall upward trend, consistently testing and slightly breaching the resistance level of $0.274. The RSI fluctuates between 44.3 and 74.0, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I recommend a long position strategy. We will enter a long position when the RSI dips below 20, indicating an oversold condition. Currently, the RSI is above 20, so we will wait for a suitable entry point. The stop loss will be set just below the support price of $0.223, at $0.21 to protect against a potential downside reversal. The target price will be set at $0.29, aiming to capture a significant portion of the potential upside. To refine the strategy, we'll incorporate Bollinger Bands. When the price touches the lower band and the RSI is below 20, it signals a strong buying opportunity. We will enter a long position at $0.25. The stop loss will be set at $0.23, just below the lower Bollinger Band. The target price will be $0.29, aligning with the resistance level and providing a reasonable profit margin. This combined RSI and Bollinger Band strategy aims to capitalize on volatility while managing risk effectively. This portfolio combines the strengths of both indicators for optimal performance. Based on the historical data and forecast, Zcash has been in a downtrend, with a significant drop in price from November 20, 2025, to December 3, 2025. The RSI indicates that the asset is currently oversold, fluctuating between 34.1 and 42.3, suggesting a potential for a bounce. The forecast for the next week predicts a continued downward trend, with prices falling to as low as $298. Considering the support level at $312 and the decreasing forecast, I recommend a contrarian strategy. Enter a long position at $312, placing a stop loss at $298 to limit potential losses. Set a target price of $369, aiming to capitalize on a potential short-term rebound. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trading below the lower band for several days, reinforcing the bearish sentiment. However, a potential reversal signal could appear if the price touches the lower Bollinger Band and starts to move towards the middle band. Given the oversold RSI and the forecast, a cautious approach is warranted. Therefore, I suggest a portfolio combining the RSI and Bollinger Band strategies. Enter a long position at $312, set a stop loss at $298, and target $369. This strategy aims to benefit from a potential short-term recovery while mitigating risks with a tight stop loss.